Well, hello everyone. My name is Roger Scott. I'm the head trader for Wealth Press, and today is Wednesday. It's May 20th. I still don't know where the year has gone, but the market has been rallying last few days. We've had some positive news, possible solution or vaccine for COVID-19. So as I always say, let's get into it right now. And remember, today is Wednesday. I'm giving you red meat. I'm going to give you a stock, a stop loss, and an option for it. But first, let's get into global economy and we'll go from there. Now, global stock markets were subdued Wednesday as investors waited hopes for a recovery as economies gradually begin opening back up. We still don't know what's going to happen because we still don't have a vaccine. It's a big question mark, but we got to wake up the economy sometimes. Now, experts also raised doubt over a potential vaccine being developed by Moderna. That's the company that caused the big rally that on Tuesday had driven Wall Street's biggest rally in more than 5 weeks. Scientists noted that data from earlier clinical trials of the vaccine were too limited to yield any conclusive results. Don't get too excited just yet. Japan's nation state of emergency, which asked people to stay at home but was not on lockdown, was recently lifted in the rest of the nation with social distancing restrictions. As far as crude oil, prices have firmed up as oil-producing nations cut back on output and as a gradual reopening of the economies around the globe helps spur demand, which crashed earlier this year due to the widespread travel and business shutdowns related to the COVID-19. Oil started the year at 60, and boy, oh boy, we went down for a count. All right, so today is Wednesday, and again, as I mentioned, today we're going to talk about the best stock. So how do we figure out the best stock? Well, we got to get there somehow. So we want to start with the right sector. So we're going to look at the top sectors, and sometimes we'll use this to pick the weakest stock, like in this case, it will be the financial sector. But in this case, I want to go for strength. And if we look over the last 6 months, 3 months, and 1 month, the top sector is undoubtedly technology. It remains. Look at this. Even over a 1 month, we got 831 point gain. And consumer discretionary, we got 8.87. So they're the only ones that are in line. Now, if you want to know why that's the case, let me show you how that would look here. Energy is up because it's bouncing. That's a short covering. But notice consumer discretionary and technology over a month, they're very close to each other. And if you look at them over a 6 month, 3 months, and 1 month basis, you will see that the only thing in between them is healthcare. And that's telling me consumer discretionary and technology are coming together as one. When the markets were really fragmented, consumer discretion and technology were really far apart. Now they're coming closer together, which is telling us the markets are ready to be fragmented and to move once again, which makes sense after such a steep correction that we had. So tech is number one. There's no reason to look further. Now let's look at the full tech. Now I'm going to look at the cumulative strength index for the NASDAQ 100, which is the top tech stocks. We got them all organized in the right order. And look what we have here. We have ATVI. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. It's the 10th stock so it's in the top 10 percentile. ATVI, I previewed this stock just a few days ago. It makes gaming software. As a matter of fact, let's take a look at the profile of the company, and then we'll go back into the charts. Most successful interactive entertainment company. And if you could, as you could see here, the returns, 5-year return, 189%. I remember this because I just covered it a few days ago. And again, the stock is a winner. It's a leader in its field. It's buying up other game companies. And I'm going to tell you something. Video games, a lot of people thought they were going away after the 80s and 90s and 2000s. Folks, video games are not going anywhere anytime soon. As a matter of fact, we're just seeing more upside in games and hobbies. Now, the stock is making, let's just make sure this is all-time highs. No, not all-time highs, but it's definitely breaking out. So over a year, this is definitely the highest price in a year. 2 years, no, but we've seen we're at 52-week highs right now, which is significant. Now, here is what I love about this stock. Notice it goes up, moves sideways, moves up, moves sideways. Those are the two natural rhythms of the market. Now, I know that you've probably heard Elliott wave, Gann lines. Folks, I've been doing this for 26-something years, and it's all a bunch of nonsense. I've tested everything. If you like Elliott wave lines, Gann lines, good for you. But I'm telling you right now, Take a look at prospective sheets of professional hedge fund managers. I dare you to find someone saying the word Elliott wave. Professional managers and fund traders, they don't play that Elliott wave, Gann wave line nonsense. As far as I'm concerned, the market has two waves: up, down, vertical, and horizontal. Two directions: up, down, and sideways. And the longer it goes sideways, the better the odds it goes up. And the longer it goes up, the better the odds it goes sideways. Those are the two natural rhythms of the market. So as you could see here, we went up, we went sideways, we went up, and now we're going sideways. Now, what I love, and what I'm telling you right now, what I love about this trading pattern is there's lower and lower volatility here. So when you have a sideways channel, low volatility, and the markets are making higher highs, that's a very low risk entry point because you'll know if you're wrong. So in this case, I would look for a buy stop right at $76. If this stock goes to $76, I wouldn't even go higher. I would just go at $76. I would go long. And if it goes below $71, $71.25 say, I would get rid of it. So my buy stop, I would enter on a buy stop. It would be right at $76, and my exit would be right around the $71.25-ish level. Now, if I'm trading options, let me show you what I would do. Let's go to option prices. And you would know pretty quickly if this trade is working out or not. And again, lower volatility means low risk. Think of it like this. Whenever volatility is lower, you're able to figure out if you're right or wrong on the trade much sooner. So let's go to 717. That gives us 59 days. That means even if we hold the stock for about 20 days and nothing happens, or the option, you're still going to get a lot of value from it. And again, I want you to go through my entire process of how I go through this. So the stock is right now at $73. Plenty of open interest, plenty of volume, not a problem here. I would say, for the sake of good implied volatility and delta, why don't we go for the 75 strike price, right? Because at that point, the stock is going to be around 76. So we'll be in the money, and the price of that stock will probably be closer to $4. But it is what it is. Now, I don't want you to buy the option unless the stock gets filled on a stop at 76. So if it gets filled at 76, that's when you would buy the 75 strike price call. You're buying the 75 strike price call, the 717 expiration, still got 59 days to go. So even, for example, let me show you, even if you hold this stock for a month and nothing happens, the 75 strike price is $2.20. So you're only going to lose about $2. You're not going to lose the entire premium. But again, I would go for 717 monthly expiration. I would go for the 70. Actually, you're only looking to lose about $1. It was about $2.25, and now it's $3.25. So there's about, if assuming the stock stays where it is, and it's not gonna, but assuming you would, you're talking about $1, a third of time premium. The rest is all value, or at least we know what the value of that option worth. So we're buying 59 days, and I wouldn't hold this for more than 20. If in 20 days the stock just continues going sideways, I would just forget about it. But I would put a buy stop at 76 and a liquidation stop right around 71. I would buy this 75 call that's expiring 717. It's got plenty of open interest right here. You can go for 72.50, but once the stock gets to 76, it'll be too far in the money. You might as well go with the 75. You're paying less for the same in the money value. Now, again, the price is probably going to be closer to 450, but the spread is pretty good on the stock, and there's good open interest. But again, buy it. If the stock goes to 76, you buy the 75 strike price call option expiring 717. If the stock goes back to 71, you liquidate that option. Very clean, very, very, very simple. It's not complicated at all. And again, the reason I like this stock right now is it's making a one-year high. It's at 52-week highs right now. Let's see. If you go back to a year, yeah, there's nothing here higher than this price. If you go 2 years, let's see, October of 2018. So yeah, we're talking quite a while. So the stock is on the upswing. And again, I love the fact that volatility is low. Look at this. This tells me we're able to get in at a good price without being clipped just because we're in the stock by trading range. You get in at 76 and you get out at 71. And if it goes your way, we'll profit probably till about 80, 83. And if it doesn't go our way, well, we'll get stopped out. But again, low risk entry. Low risk entry when the stock is breaking out. strongest sector, 10th strongest stock, has more upside, earnings already passed us, a lot of recommendations. Let's see how many analysts are recommending this stock. Jeez, 18 strong buys. That's institutional sponsorship, folks. Look at this. One strong sell, 18 strong buys. I love this stock. I really do love the stock. And look at the price action. It's just been going higher and higher. It's definitely right at 75-week highs, which is at 75.97. And I'm suggesting you enter at 76, which is 3 cents above the 52-week high. I love it. I hope this trade works out. Now, I got something big for you folks. I'm not kidding around here. Now, you might have noticed, I hope you've noticed, I've been missing in action. I've been gone for the last couple of days for good reason. Now, I've got my hands on what I think could be the third and final piece to a puzzle that I've been trying to solve for decades. That's right, decades. Now, in 1989, a guy who started with $400, and ended up with $200 million. $400 to $200 million, all documented. He vanished from the trading scene, and I think I just cracked his legendary trading system after almost 50 years. Now, if I'm right about this, then according to my data tests, this could boost anyone's retirement by a staggering $3.43 million in just a few years. Click the link below or the button at the end of this video to discover what I found. Folks, you do not want to miss out on this. And let me know how you did on ATVI. Follow the link below. This is a breakthrough in trading history. Talk soon. Take care.